Welcome back to another Xlence narrative podcast. My name is Chris Karalis, trading specialist, and together with us we have Andreas Haralambous, the market research analyst. Andreas, welcome to another podcast.
Hello, everybody.
Today we're talking about one of the oldest, loudest, and frankly the most dramatic assets in the financial history, and that is gold. Gold isn't just a shiny metal. It's the world's emotional support asset. When markets panic, we run into gold. When inflation rises, we run into gold. When central banks sneeze, gold moves.
Okay, and yes, speaking about moves, and we have seen gold reaching historic highs in 2025. We definitely saw a strong move on the upside, primarily driven by fear from investors, in a sense, channeling flows into this kind of safe haven asset, as it's usually branded as a store of value and the place to hide when things turn sour. And we have seen things turning sour in 2025, but also especially US equity markets have, broadly speaking, prospered at the same time, which is kind of paradoxical.
It has been definitely a busy year for everyone. Speaking out of the fundamentals now and what actually moves the gold, let's start off with inflation rates and the Fed decisions. Then we have the central banks buying gold, increasing their stock, the US dollar, the US bonds, as well as the geopolitics or sometimes the environmental disasters. And of course, some traditions from India or China can also spike gold during those periods.
So yes, you've noted pretty much all the factors that do indeed affect gold's price, either to the upside or to the downside. So let's go through them in order to best understand how these kind of factors do indeed affect its price. So let's begin with, let's just say, the obvious one, which is the United States dollar. So as we all know, hopefully, the price of gold is quoted in United States dollars, so it's intrinsically linked with money, with another, in a sense. So gold's price is quoted in dollars, so it's in this particular moment in time, we're ranging somewhere around $4,000 and $200 per ounce of gold. So yes, the relationship of the two, as just mentioned, is intrinsically interconnected, interrelated, because in periods where we do see the United States dollar appreciating in value, mainly against its main counterparts, such as the Japanese yen or the euro or the British pound and all that kind of stuff, if the United States economy is thriving in a sense or is performing very well, you would tend to see the dollar strengthening in value, which in a sense is detrimental for the price of gold, mainly be from the point of view of foreign investors, because if the United States dollar strengthens against their own currency, that means they need to pay a lot more dollars in order to get the same amount of gold. So it's the relationship can be best described as inverse, okay, or negatively correlated between the two assets, the United States dollar and gold. And that is the most important factor that indeed affects how gold behaves in capital markets. So now, when we talk about the dollar's strength or the dollar's weakness, the dollar invertedly is affected by a lot of factors, and those kind of factors can be economic news releases. So, for example, what is going on with the inflationary pressures of the United States economy? What's going on with the labor market of the United States economy?
The uncertainty of tariffs.
That goes to the geopolitical front. But yes, it does indeed affect the dollar's price or the appreciation or devaluation of the dollar. And therefore, that is inversely related to what's going to happen to the price of gold. So if the United States dollar strengthens, gold, historically speaking, tends to weaken. And in times where we see the devaluation of the dollar strengthening, or in a sense, devaluating at a faster pace than what the market expected, you tend to see gold rising in value. So that's one. That's the dollar. Another relationship which is crucial for the performance of gold is bonds, so debt, in other words. So when you see bond yields on the rise, you tend to see gold falling, okay? Primarily due to the fact that what's the reason why of purchasing and storing gold at your own cost, where on the contrary, you can just purchase bonds and instead get a yield after that, so interest payments from those that you borrow, you get the loan from. So this intrinsic kind of opportunity cost is in fashion on a cyclical kind of period. So depending on the situation, this kind of effect gets brought into the picture. Sometimes it doesn't work at all. So we mentioned the dollar, we mentioned bonds. Let's just talk about...
Let's go with the central banks.
Central banks, another crucial factor that does indeed affect the price of gold. So in a sense, gold is losing momentum, theoretically speaking, or it's losing its value, or it's not attracting as much as demand as it wishes or other people want, is when central banks raise interest rates radically. So back in 2022, we have this inflation crisis that was brought and spread across the world, and we saw central banks rallying, okay, to raise interest rates in order to bring inflationary pressures back down. At that point in time, we saw gold facing outflows, so money where people were taking money off gold, so we were selling gold, and we saw prices declining fast. And now we are at the period where central banks are feeling confident about the inflationary pressures within their economies, and therefore they start slashing rates or cutting rates. This is beneficial for gold, okay? So it pushes price of gold upwards, okay? Another key factor, maybe as you mentioned, geopolitics, and we have a lot of turmoil in regards to geopolitics.
Yes. This is a year that a lot of things are happening. Maybe the year with the best peace deals that we're going to see, or maybe those peace deals will not last for long.
Yeah.
Let's see.
That is the question to be answered. Yes, we are living in a tumultuous period of time, not a new kind of template for geopolitics to say. There have been wars in the past, prolonged periods of warfare between nations. Where we stand right now, we do have a conflict between Russia and Ukraine, and a possible deal being cooked between parties to solve this kind of
including
issue.
NATO, including the European Union and countries near
the United States, Ukraine, Russia, NATO, and
the EU, of course.
US, broadly speaking. So yes, this is a hot topic in regards to the effect that it has on gold's price. Back in 2022, where we saw Russia invading Ukraine, we have seen gold rallying on the back of this, or at least moving towards the upside. We also seen, and over the past few years now, the conflict between Israel and Hamas in Gaza. So that's another open front in regards to warfare, which tends to fuel inflows towards gold because, again, it is deemed as a safe haven asset, and during periods of uncertainty, not only economic but also political, okay, gold tends to receive inflows, and that's what actually happened. Now that, as you just mentioned, however, we are in a period, a transitional period, or a period where we see the possibilities for the resolution of these two conflicts coming closer, we do tend to see the prices of gold being adversely affected by this, because certainty comes back onto the table, peace overturns war, if you will like. So the period of uncertainty certainty comes to an end. That means no need in a sense, to keep your money in gold. So that's why we may see outflows from gold if indeed the conflict or these aforementioned conflicts come to an end.
And we don't know if another conflict might come up in the scene as well. We see what is happening with Venezuela. We see what might be happening in China and Taiwan, and maybe a probable ceasefire. I mean, they find a solution there, finally.
Yeah. But still, the problems are there, the indications, the early signs for the possible the possible ignition of conflict between the two nations, as you mentioned, the United States and Venezuela, on drug trafficking kind of cartels that come from Venezuela.
But it's not only this, maybe that's only the reason, right? And they would just want to go and control oil and...
Some could say that, yeah. If the United States is involved in this kind of things, maybe it's another underlying reason.
Our job here is about speculating the financial markets. Yeah. So maybe some...
Why not do it? So yeah, the United States and Venezuela, the reason for this newly about to be erupting kind of conflict is that the Venezuelan government headed by Maduro is indeed channeling or trafficking kind of illicit drugs into the United States. The United States say, you know what, we're going to hunt down those that bring illicit drugs in our country. Venezuela is the country that does this, and Maduro is the president of the country, but also the head of the cartel that traffics drugs into the United States, and therefore the United States Department of War wants to go and fix the situation. But yes, there are underlying cues that is not about drugs, it's possibly about oil fields north of Venezuela. But yeah, we'll see.
Let's see how it happens. At the same time, sometimes we see spikes on gold during celebrations of traditions, for example, in India or in China, the two largest countries by population. And again, gold moves sometimes. Yeah.
We're not going to place strong importance on this kind of factor, but it is indeed a factor that we here and there pay attention to at near critical periods where there is an influx or a lot of weddings taking place.
During the Chinese New Year.
Yeah, in India more specifically, where they like to dress up and use gold as an indication of flamboyant kind of heritage and wealth. During this period of time, you tend to see a spiked up demand for gold, and it has some sort of effect on gold's price in international markets. It's a slight effect, but it's still there. It's another factor. Same thing with Chinese New Year, as just mentioned. Yeah.
Wonderful. So thanks for... we covered the major...
Pretty much everything, yeah.
Pretty much everything now. The major points, just to summarize, all right? The bullish case and the bearish case for gold. As you mentioned, just for our listeners to understand and be able to follow the news, we said bullish, meaning when gold prices increase, when the rate cut comes sooner than expected. So we have an unexpected rate cut.
Sooner, but also more rate cuts. Some might say this, yeah.
Yes. When the dollar weakens, we see gold rising. We said about the inverse relation between the US dollar and the gold. Geopolitical stress rises. So when we have geopolitics are on the news, on the headlines.
Conflicts between nations or natural disasters and all that kind of stuff, yes.
We see gold increasing in price, and when the central banks accelerate in buying gold.
Yes, that's another factor, shoring up of holdings from central banks and stocking up of gold. That's another factor, showcasing strong demand for the asset. Maybe we are left without the rationale behind the purchases, but still the fact that central banks go out and buy mass amounts of gold, much like the PBOC, People's Bank of China, have done over the past year or so, it's an indication that there is reasons why gold is important or could be important in the next few years or decades. That's going to give a hint out. BRICS, maybe one of it. We'll see.
We'll see.
But yes, pretty much the bullish case is when you see central banks lowering interest rates, when inflation is pretty much controlled, when geopolitical uncertainty is rampant, and what else? When bonds are not seen as attractive by investors. Now, the bearish case.
Now, what is the bearish case exactly?
Yep.
So when gold goes down, and this is something that I believe everyone is trying to find the turning point to short gold.
Yeah.
And when inflation spikes again, right?
Yeah. Reignition of inflationary pressures.
Reignition, when the central banks delay the cuts,
Sure.
or maybe increasing the rates.
So, yes, of course, we go hiking rates. Yes, it's not on the table right now, but it's a possibility if we see inflation rising. Yes.
Yes. The strengthening of the dollar.
Strengthening of the dollar. Yes, due to robust economic activity, GDP readings, and consumption and employment rising, and all kind of stuff. Yes.
And of course, when the risk appetite returns back to equities and the markets.
Of course. So when let's just say the risk on kind of mentality, when traders are fearsome and scared about what's going to happen in the near future, more specifically speaking about equities right now, let's just say the AI bubble may burst, okay? Most likely you're going to see the price of gold rallying on the back of this. So if these kind of fears for the AI bubble not materialize or fade, okay, most likely you're going to see inflows back towards riskier assets, which is equities. And on the contrary, what's the point of holding gold? Let's just dump gold, okay, sell our gold holdings or downsize the portfolio size attributed to gold, and let's just go full risk off mode. Okay, so in a sense, channeling money into equities where you can get better gains compared to a safe haven asset gold, which is not performing as well as equities. With a caveat that this has not been the case in 2025. We've seen all of these things rallying together. So maybe the world has extra cash in its pocket and wants to spend.
Something might burst. Maybe everything is expected, right? For gold now, gold is reactive, right? And it's all about the narrative, all right? It always moves based on the news, all right? Based on everything you mentioned right now. And what can we say about the technicals now?
Yes, so if I'm not mistaken, gold is currently up from the start of the year by more than 50%, maybe 55, maybe 60%. I can't exactly remember the percentage of gains it has occurred, has received this year. We have seen
50%, 60%.
Yeah.
There's more.
More than 60%. So the peak was around $4,350, $80, something like this. A crazy amount for gold. It has performed as a speculative asset in 2025. We've seen it becoming or being the best performing asset class or asset or financial instrument in 2025, which says a lot, given that we have seen rampant optimism in regards to valuations and earnings results and revenues from top companies. And for some reason, war and conflict being broadcasted on a daily basis in our lives. So it's a paradoxical situation. Yes, maybe someone says that on a technical level, gold has been and is overextended. For the time being, we have seen it pulling back from the record highs into a territory which some may say it's a psychological level, the 4,000 level, and it has been revolving around that. So now gold is on a technical correction for the time being, or it's actually undergoing a pullback. And what's going to happen to gold? I don't know. If you look at the chart on a monthly basis, you're going to say bye. This is a short-lived pullback, and we're now going to move into uncharted territory once again. If you zoom in, I don't know, on a daily or on a 4-hour level, you can see that there is a lot of selling pressure. Maybe we're going to head towards lower ground. But again, we're going to keep our eyes on fundamentals.
The fundamentals, we agree, but some people trading on technicals, right? The most important point to highlight is that gold respects the psychological levels.
Okay.
It broke the 3,000, it broke the 3,500, broke the 4,000.
Round numbers, yeah.
It retested it, and now it's back higher than the 4,000 psychological level, of course below the all-time highs. And if it breaks the all-time highs, then it goes to uncharted territory. Nobody knows
5,000?
Nobody
6,000?
knows what is the limit.
Yeah.
It's a matter to see.
Yeah.
But gold is definitely an asset that respects volatility. And let's keep an eye on the US dollar, on the equities, and on the current news, as you mentioned, geopolitics, the interest rates, and try to identify the next move. Now let's wrap up today's episode about gold. Is the metal that refuses to stay quiet.
Unfortunately, yes, the gold has a lot of ties with a lot of things, so you need to pay attention to what is going on in every aspect of the market. As we said, closely related to the dollar, intrinsically and intricately related to the dollar. So we're talking about right from the gate, you're going to have to pay attention what's going to happen in the FX market and what is happening in the FX market. Okay, that's one. Closely intrigued with bonds, closely intrigued with economic news releases, closely intrigued and intricately related to geopolitics, equities as well. So everything is connected to the gold. So you need to pay attention to everything in order to come up with a holistic kind of point of view and use this kind of data in your advantage and hopefully come on top of this current trend. Yep.
And never get too confident. Always try to keep your exposure low and control your trades, and keep an eye on the charts. If you enjoyed this episode, make sure you like, subscribe, and make a comment. Thanks for watching.